Hey guys, Mike here. So, oh boy, what a day in the market. And again, if you watched the video the day before, what did we talk about? 2 trading days prior to 4th of July is seasonality or historically one of the greenest days in the market. Put that in your phone on your calendar for next year. So that check marks another green day. Let me know if you participated. I know I had some calls myself, so I was happy about that. Now in this video though, I'm going to need some help from Airbnb participants. If you happen to own Airbnb, because there's some data that came out and it looked very strange. And if it's true, it's terrible. And so I want to kind of get confirmation on that. Also, we had student loan news come out from the Supreme Court. I'm going to show you how that's going to affect, or could affect, well, actually it's going to affect the consumers and stuff like that. And then, I'm going to address something because it never fails. You can't please everybody or whatever. I try to remain neutral on this channel, but anytime you present data and it's like really bearish data or really bullish data, I'm out here getting labeled one or the other, right? And so anybody that really knows me, has been following me long enough, knows I'm neither one. I'm just a data-driven person. That's just the way it is, okay? And so I'm going to show that to you and show you something else the perma bears definitely won't like that just took place on one of the indexes. So be prepared for that and stuff, okay? But, the news, if you don't know what happened and what drove everything green or whatever, what came out was personal savings data. What happened? It actually increased again, so it's kind of going back up. Supposedly we're saving money. Of course, we're actually making money, according to the new data that came out. So that is good for the consumer, right? And then, of course, there was PCE, personal consumption expenditures. This is something the Fed loves to look at, and you can see, obviously, year over year is dropping off a cliff on the main one. The core, of course, is still sticky, but coming down slightly, which we expect that. Now, the big one, of course, and this is, to me, the biggest decision that was made, the Supreme Court blocks President Biden's student loan forgiveness program. So what does this mean? Well, we have about 45 million borrowers. Put in the comments if you're one of them. I know I am because I got my MBA a few years ago and got to pay that back, right? And so the average, anywhere from 354 to 541. This is data from like 2 months ago. So I found the latest data for us on this. So if we do the math on this, and to be generous, let's just say half those student loan borrowers haven't been paying, and they're going to have to pay back. I mean, I think this is being very generous, right? And let's just say it's 400. Okay, I'm going with the low end of this, right? So that's going to be 8.8 billion. Okay, 8.8 billion coming out every month from, instead of going to actually spend on Nike shoes and cars and everything else, it's going to be, or putting in savings or stocks or whatever. It's obviously going to be going to pay student loans. Let's say everybody has to do it. Well, all of a sudden now you're talking about $17.6 billion a month going to pay student loans and not to obviously spend, right? And so it'll take out from discretionary spending, which has been killing it so far, right? And so, of course, what's this going to affect? Well, it's going to affect disposable personal income, right? And so, you can see right here, real disposable personal income per capita has increased for 11 straight months. It is now 1.6% above where it was pre-COVID, but about 2.6 below pre-COVID forecast. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so, of course, what are some of the areas this could affect? Well, how about travel? I mean, look at this right here. You don't think it can get any bigger and stuff? Every time I look this up, it keeps getting more and more. But you can see the average daily passenger volume at U.S. airports, and look where we're at. I mean, now we're tied with 2019 now, but look at it's gone since 2020. Up and up and up and away, right? So could it affect this? Travel, all that stuff? Absolutely, yes. I would assume that would be the number one area that it would affect. What else? Cars, buying homes, like all this stuff. And so just keep that in mind. What else is it going to affect? People driving up the credit cards even more, okay? Because again, on the light side of it, saying 8.7 billion a month, like that's just not going to grow on trees. People are going to pick off, okay? Unless people want to go get second jobs, they're going to, if they're doing a budget, they're going to say, okay, what's going to happen? I'm going to put less in savings, less in investments, or I'm going to sit here and stop spending, this amount of this or this amount of that, or just do a combination, right? But either way, something's got to give. That 8.7 billion, and again, that's if only half student loan borrowers start to pay back, has to come from somewhere. okay? And we're the consumer, right? The economy, that is, not the market, the economy goes as the consumer goes, right? The market goes as how the government goes, okay? And I'll actually show you more of that tomorrow. Now, this is what leads me to Airbnb, because it's always been a very interesting stock to me. And this data came out, and I'm going to show you both views on this. And if you own Airbnb or have data on this, please let me know, because I'm really want to know this, because it was shocking. And this came out, and it said Airbnb revenue collapses, and it says the top 10 cities. And you can look at the cities right there on the left, and then on the right, look at the percentage drops going from May 22 compared to May 2023. Those are massive drops. I find this hard to believe, and the reason why is because it don't pass the sniff test, right? Because we know we're traveling, all right? You look in the comments and everything, we know we are traveling. There's no doubt about it. And when you look, though, all of a sudden I found this other chart which compares that data to another source called AirDNA data. And you can see, shockingly, they're still negative, but there's nowhere near as much. I mean, a 10% drop is not good, right? And, you know, or maybe 10.5 down at the bottom in Orlando, Florida. So it definitely surprises me. And the reason why, and the whole point in creating this community and this channel right here was to build a community, is because when you look in the comments, right, I hear from you guys, well, what's going on? Everybody agrees, like, yep, we're all traveling. We're all traveling. So that surprised me, but two different sets or sources say, yeah, those cities are dropping, right? But the one was stat. I find that just too hard to believe. I always say the truth usually lies somewhere in the middle. But if you own Airbnbs, you know, please let us know. Is your revenue going down from May of 2022 to May of 2023? Have you had to sell the properties? That kind of stuff. That's what I want to know. That's a great thing. If you don't read the comments, I'm telling you, look through the comments. Some great conversation take place, because this is a mature crowd, it seems to be, right? So I enjoy doing that, but you'll learn something because you get real-time data from real people, okay? And so instead of having old data, which is a lot of times what we somewhat get, but it's the only data we got, right? Now, going and addressing some comments from my latest video about being a perma bull, whatever it is, it's like, look, I'm going to follow the data. I'm a guy who does a lot of research, especially for the members. I was looking through some old videos and stuff like that. And I don't care, somebody said, why don't you address this more as a melt up? I've already talked about that. Whether you want to call it a pivot rally, which means the Fed pausing, a Fed pause pivot rally, a melt up, a bull market, a bear market rally, whatever you want to call it, the key phrase in all those is what happens in all of them. The market goes up, okay? For how long, who knows? And nobody knows in any of those, okay? And, understand, I was looking through here, but, back in December 2nd, right? So over 7 months now, I did this saying what really happens when the Fed pauses rates and cuts them. And it was like a 4-minute video, and it showed exactly what was going to happen. And that's what's been happening, okay? And I will say, I'm actually going to do an update on this video, but just for the heck of it, I'll say this. On December 14th, I said one of the most important videos I've ever done, spot a bottom on these indicators. I'm actually going to do an update on that, because I know people say you can't spot a bottom completely, but I think with my update, you have at least a 75% chance of spotting a bottom and a top a whole lot better, just because I like to study the markets and what drives it and stuff. And so I'll definitely do an update for the members video on that one. But understand, again, I'm just data driven. That's just the way it is. And here's some more data for you, right? So no guarantees, but look at the cues, right? What's driving tech? This is July performance. Look at the last time there was a red July. It was in 2007. So almost 16 years since we've had a red July. And look at some of those performances. 5%, 7%. I mean, and again, green means green, whether it's 1% or not. And so we could trade sideways, have a couple good days, but July historically is a good month for the Qs, which is why this rally could continue. Is that guaranteed? No, but this is what the data tells us. Same as Friday, for those who didn't want to listen. Guess what? It was super green, okay? I don't care what economic data was coming out. I think it was going to go green either way, but that's just the way it is, okay? And so we'll see if this continues. What else has happened on the longer term time frames? This is the monthly, MACD cross, right? That's a bullish thing. If you look when it's happened in the past, it's not a bearish thing. It doesn't mean it's going to go straight up, all right? But a MACD cross is positive, okay? And the RSI is heading up. It's above 50 on the monthly. These are larger time frames. Now, what's happened? We talked about this channel. It bounced perfectly off that midline, gapped up, so it left a gap below to fill again. But, you're looking at 372.89 in the mix if we do have a green July and stuff. And if we scroll back, you can see what other levels are we looking at when this happens, okay? So 372 is going to put that April high in target, right? When we finally break through that and then maybe retest it. But if it does retest successfully, then you're looking at these other levels. Remember, these are all-time highs, right? That's why you don't got a lot of resistance. 381. What's next? 389, right? And then the all-time highs right there around, what is it, 405, I think it is. And I'm not saying it's going to happen anytime soon, but I'm just saying when you look at Apple, once you clear those spaces where there's not a ton of resistance and you got, whether we call it melt up, pivot rally, bull market, bear market, whatever you want to call it, whatever makes you sleep better at night, that can happen, okay? And the reason why it can happen, and I'll show you a little bit about this tomorrow, is who's piling in. But one reason it can happen sooner rather than later is look what's going on in the S&P. And this is what you want to look for. I did a members video on this yesterday showing them this in detail, how to track it, how to see it, what's happening. More breadth, right? You want to look at the stocks making new 52-week highs, the stocks above a 200-day moving average, and you can see it's getting close to going up again to that 10% and then breaking that. If that continues, I'm saying if it continues, the rally will continue most likely, okay? So you got to keep that in mind. That's what's causing, guess what just happened? Right here, you're going to have a MACD cross on the SPY now, the S&P 500, right? Look at when that's happened in the past. Okay, doesn't mean it's going straight up. Doesn't mean any of that, but it's not bearish. That's for dang sure, right? And when that happens, that's when you see these algos kick in, stuff like that, crossing moving averages, MACD crosses, RSI coming over the 50, and all that good stuff, right? And what do you see us hit? Here's another trend line going from October lows right there, and you can see it's been very well respected. That's what we ran to yesterday. As you can see on the short-term time frame, as soon as we hit it, like right there at the end of the day, came back down. So let's look and see if we break above that trend line, which we've done multiple times in the past. We just haven't been able to hold it. Again, on the hourly, the RSI, yes. Is it overbought? Sure is. And as I tell everybody, look, are we in extreme greed again? Absolutely, right? Are we getting overextending a lot of these stocks? Absolutely, and I'll address that in just a minute. The Russell's the other one. Everybody's looking for small caps to start participating, right? We've never had a major rally or bull market without small caps participating, but it's tough in this environment for it, right? And so that's why we need more technical stuff than stuff to do with the economy right now. But you can see it can't get anywhere near that 10% move, but it's trying to get at least above 5 again. And so we'll see if they can finally push this up, because it won't be on some environment that's great for, small caps or anything like that. It's just going to be off the technicals I've showed you. These crazy extremes that we've been set in when you face the Russell against the SPY, the Russell against the QQQ and stuff, right? And so if you look at it, again, 189 is the key until it gets above 189 and closes, and I have like a retest. All this is noise. That's all it is, okay? Got to get above that all-time high anchor VWAP, which of course got rejected off of last time. If you can do that, then you're in business, because you got that volume gap right there, and you've seen it move multiple times. Look to the left of those peaks, okay? And so we'll have to pay attention to that, right? Everybody thought we were going there, what was it, 3 or 4 weeks ago, and then it sold back off, right? Everybody thought Chinese stocks were going to be going, to the moon and stuff. Again, I kept saying, if China is not going to signal they're going to do more QE, again, I'll address that a little bit more tomorrow, but if they're not going to do that, then Chinese stocks are going to be struggling. That's the way it is, as you're getting downgraded now at the big firms because of that. And so we'll see. But of course, going back to what I was talking about with the breadth and things being overextended, the only way the market rally continues, and this is what I'm curious about and get your opinion on, is going to have to be the big stocks continue up. Because if the big stocks can't continue up, I'm talking about the AMDs, NVIDIAs, Apple, obviously just through the roof. I'll cover that chart tomorrow for you. It's just crazy. Microsoft, all the rest of them, they make up such large weights that hundreds of billions could flow into the other stocks because their weights are so little. They're minute compared to them. I mean, think about Apple and Microsoft now make up, almost 15% of the S&P by themselves. 2 stocks out of 500 make up almost 15%. So that's what I'm saying. You can have billions flowing into the other stocks, but if it's flowing out of the top, then guess where the index are going? Nowhere, right? Probably down is what's happening. So that's what I'm curious. What do you think? How far is multiple expansion going to go? Because that's what's going to have to happen. The other thing to watch out for this month that could derail a green July, just being honest, is don't forget we do have CPI, which I think right now is continuing to beat the numbers. But more importantly, banks report starting on the 14th of July. So right dead in the middle. All right. And so again, it's all about earnings. And then we'll have, obviously, the week after that, more and more earnings coming through. It'll obviously really, I think, more importantly, going to mean something more for the big stocks, but the Magnificent Seven and stuff. But, that's the only way the Qs go green, if those top 10 stocks obviously have great months. Okay. Again, the rest of them can do what they want to do. They just don't wait. They don't have that much weight. Right. And so, just keep that in mind as well. But the 14th is going to be key. Everybody's going to be locked in, listening to what the banks have to say. Remember, though, and again, I'll address this more tomorrow, but, they're getting bailed out. Right. They're getting bailed out, and nobody cares anymore about, especially the market, about smaller regional banks failing. They don't care. All right. Because they know the bigger banks are just going to come in and be able to buy them for pennies on the dollars anyway, right? Which they shouldn't be able to, but they will. And so, that's what the Fed and Treasury and everybody is signaling they'll do. And so that's something else you got to keep in mind. Again, I'll address a whole bunch of this tomorrow for you, so I can keep this video somewhat short for you guys. But, what's happening is, you saw what happened to the dot-com bubble. Had a bubble, boom, popped, exploded down. Then all of a sudden what happened? Had another bubble start, the real estate bubble. Came up, people were like, oh my God, how are stocks going up? Things are so bad. It happens, right? After 08, what bubble we have? What we didn't know was we had the government bubble, the QE bubble, right? Coming up, 2018, they tried to start deflating that bubble some by running off the Fed balance sheet, raising rates, all this other stuff. The market had a freaking hissy fit, so they couldn't do it, right? Now, and coming out of 2020, what do we have? We had the SPAC bubble and all penny stock bubbles and everything else, right? Well, now we got the AI bubble. Right, so we got a whole nother bubble that's helping push this whole thing up. And I mean, trust me, that bubble will burst like all the bubbles for a lot of stocks. Okay, because the earnings will not meet what people are expecting, because these multiple expansions are getting insane. But it's going to take time. That's just the way it is. It's going to be ups and downs. It's going to be rough. And I always tell you, just look at the chart. Look at how many times the QQQ, for instance, since tech leads everything, it seems like, has crashed more than 20% just in the last 4 years. Just in the last 4 years. Go back to October 2018, and again, go back to October 2022, and look how many times it's crashed more than 20% just in that 4-year span. All right, guys, take a look at that. All right. So, hey, if you got anything out of this, hit that like and subscribe button. Really appreciate you guys, and I'll see you tomorrow.